Okay, if you were looking for some rocket fuel for Bitcoin in 2025, we just got it in the form of some boring regulatory changes, but some accounting rules just changed, and you're going to want to know what they are because they set the stage for a rocket booster for Bitcoin in 2025. So first off, if you didn't know, late last year, there was a change to this FASB accounting rules. Long story short, companies who wanted to hold Bitcoin on their balance sheet, like MicroStrategy, had to do so under a particular type of accounting that made it so that they could not mark the value of the Bitcoin to fair market value. Basically, they had to mark it at cost, and then if it went down, they had to mark it down, but they could not mark it up if the value ever went up. So you think about MicroStrategy holding like 400, 500,000 Bitcoin or whatever. They were never able to mark the gains on their balance sheet. I'm pretty sure we actually have not seen their first earnings report that actually includes a balance sheet that reflects this new accounting change, by the way. So that'll be interesting when that first happens. So that was a big one for companies that want to hold their own Bitcoin on their own balance sheet. But we just got another one, which was the repeal of SAB 121. Again, I'm not an accountant, but long story short, the SEC mandates these accounting regulations, and they had dictated that institutions who wanted to custody Bitcoin for someone else basically had to hold it on their own balance sheet as if it was their own liability because it was deemed like basically too risky. So they couldn't custody it the same way they would custody like treasuries or something, some other asset. Financial institutions had to recognize the full value of customer-held digital assets like Bitcoin on their own balance sheets, even when they were not the owner or controller of the asset. So basically, it increases capital requirements. In other words, if you wanted to custody $1 billion of Bitcoin, mind you, not like MicroStrategy owning your own corporate Bitcoin, but custodying it for someone else, like on behalf of a client, you had to also hold $1 billion worth of other assets like treasuries, because again, the Bitcoin was deemed like too risky. Note that both of these accounting treatments were essentially hostile to Bitcoin. They were very different from the rules about holding something like treasuries, which are considered risk-free, because of course the government wants to encourage institutions to hold treasuries. The Fed needs buyers of its debt. But of course, the truth is they're not risk-free. In fact, that's what killed Silicon Valley Bank a couple years ago. So you can hold long-term treasuries and mark them as held to maturity on your corporate balance sheet. Then no matter what their actual fair market value is, you never have to mark unrealized losses on your balance sheet. But Silicon Valley was holding like something like $90 billion of long-term treasuries. When interest rates rose, they had a $16 billion unrealized loss against like $16 billion in equity. So when the bank run happened, they had to liquidate at the actual market price, which had dropped dramatically since they bought the long-term treasuries, and they were insolvent. Anyways, that's basically just an aside about how much power the government has to support or attack certain assets based on just how they issue and regulate these accounting methods. So back to SAB 121, which was just repealed, which means financial institutions like banks can now custody digital assets like they would any other asset without having to have this extra risky treatment of them that has these overly burdensome capital requirements that effectively deterred major banks from being able to or wanting to custody Bitcoin. That's why so many large institutions use Coinbase custody. So this sets the stage for some of the biggest banks in the world to start custodying Bitcoin and creating financial products for their Bitcoin holding clients. Flashback to a couple years ago when Michael Saylor gave a talk, he mentioned 3 big catalysts that he thought would be the fuel that sent Bitcoin not to 500,000, but to 5 million. The first one, approval of spot ETFs, which we got this time last year. The second one was a change to the fair value accounting rules for Bitcoin on corporate balance sheets, which is the FASB rules that I talked about that happened late last year. And the third one was the repeal of SAB 121, allowing banks to offer custody and lending services for Bitcoin. Do I think that means Bitcoin's going to 5 million tomorrow? No, of course not. These things are going to take time, but they are going to have a huge effect. Personally, I would set aside like Bitcoin ethics arguments of whether lending services for Bitcoin is a good thing. Does this constitute regulatory capture? I think like it's fair to have all those debates, but at the end of the day, I think it comes down to like, A, everything is good for Bitcoin. And B, I just did an interview with Sir Ulrich, and I think he said this same thing, which is Bitcoin is a free, open market, and you can do with it what you choose. So in my opinion, there was never going to be a realistic world where Bitcoin keeps growing, Bitcoin obviates fiat, we get to closer to a hyper-Bitcoinized world, and that doesn't come along with these other things like banks custodying Bitcoin, companies buying Bitcoin, banks creating financial products on top of Bitcoin. It was always inevitable. So there's almost this thing where if Bitcoin can't withstand that or can't hold up to that or can't live despite some of the centralization challenges that poses, to me, it's almost like then Bitcoin wasn't the hero that was promised. I think Bitcoin will succeed. It's defeated every challenge it's come up against for the last 16 years. And it's like big bank custodying and Bitcoin lending. These things aren't going to kill Bitcoin. It's still worth it to have these debates about like whether it's a good thing or, how should it be regulated? That type of stuff is all fine. There's a crazy irony there too, which is that like if big bank custody and Bitcoin lending, if these things were going to centralize Bitcoin and kill the dream of what we wanted Bitcoin to be, the irony there is that that's still going to pump the price like crazy, and all Bitcoin holders are still going to get massively wealthy. So you could say that's bad for Bitcoin, but good for Bitcoin holders. If Bitcoin holders have more wealth and more power, they can use that to continue to push the agendas they want for Bitcoin. So I think it gets pretty complicated to try to sort out what we think the future is going to hold exactly from all these rule changes. But basically what I do know is that it is unlocking more liquidity, creating more free market opportunities for people who want to hold and buy Bitcoin to be able to do so. And I just don't really see how in the long run that's a bad thing. So these things are going to take time to materialize. But basically, that's a story of rocket fuel for Bitcoin in 2025. Go steady Bitcoin.